With great pleasure, I want to welcome you to our next session, DeFi versus Cefi, Charting New Landscape. Together with industry experts, let's break down legal, operational, and psychological roadblocks related to DeFi mass adoption. Please welcome the moderator of this session, the COO of Solidus Labs, Chen Arad, to introduce his panel. Chen, the floor is yours.
Thank you so much, Eliza, and thank you everyone for joining us. So before I let our panelists introduce themselves, I'll say one thing. Obviously, FTX, the F word, as some people now call it, happened very recently after we planned this panel. And it's important for me to emphasize that all of the people you see sitting here have been working to prevent situations like this, to address these sort of vulnerabilities from long before it happened. So with that being said, I have the great pleasure of introducing, I think, one of the brightest group of engineers and policy engineers in the crypto space. Would you guys, let's start with you, Teana, just introduce yourselves briefly before we jump into the conversation.
So I am Teana Baker-Taylor, and I'm the Vice President of Policy and Regulatory Strategy for Circle in the UK and EMEA. And I am also a board member of Crypto UK, which is the UK's trade body.
Hi, everybody. My name's Lex. I am the head economist at ConsenSys, which is the software company behind MetaMask, Infura, and other tooling to help people build and deploy in Web3.
Hi, everyone. My name's Alex. I'm the head of compliance and regulatory affairs across EMEA for Galaxy Digital. We're a publicly listed financial services firm working in the crypto space.
Hi, I'm Lawrence Deju-Wiseman. I'm a director at PwC. I lead our work on market conduct and market abuse in what we call our emerging risk space. So that covers things like crypto and also complex derivatives, cross-product manipulation, and some of the more interesting emergent risks around that. I'm also a professor in the field at the University of Connecticut School of Business, where I focus on financial services conduct.
Hi, I'm Omer Goldberg. I'm the CEO of Chaos Labs. Chaos Labs is a platform, a full-stack DeFi risk platform. And we work with top DeFi protocols like Uniswap, Osmosis, DYDX, Aave to analyze and mitigate economic risk.
Thank you. And Omer, I commend you for holding the microphone so close to your mouth. Please, everyone, try to do that because I heard Omer much better than the rest of you guys. So, look, in a week like this, I think it's just natural that we'll start with some introspection. My first question to everyone is really, how did we get here? Bitcoin ultimately was it was introduced in 2009 as a response to what happened in 2008, as a response to financial services that were opaque, not transparent, centralized, where too much power was held in the hands of few executives that could do irresponsible things. How do we find ourselves in a situation where it happens with crypto? And by the way, everyone is thinking about FTX right now, but obviously it's not just this past few weeks, it's the past year with incidents like Luna, Terra, and that meltdown, Celsius, 3AC, and a lot of other events. If it's okay with you, Lex, how about I'll start with you guys. You guys have been really, really long forward-thinking ConsenSys in terms of building the DeFi ecosystem, the decentralized finance ecosystem. So how did we get here, and is crypto and DeFi still an alternative?
Thank you for the question. Is this close enough? I feel like...
The closer, the better. I'll just say that.
I'm not good at mumble rap, but I feel like this sort of
this
channeling.
is great.
Let's see if anyone's smiling at a mumble rap joke. I guess it's like 2023, so it's not on trend. Obviously we're here, and ConsenSys has been attached to the formation of Ethereum as the lab that was commercializing and building startups and ventures out of Ethereum very early on. And so it's always had this ethos of how do you enable people to build, very often at the expense of the company, and all about like pushing decentralized innovation, pushing permissionless innovation. So when you download MetaMask, like it's on your computer, not on a server that we run, and so on. So for me, it's a very frustrating moment, but the way I try to think about it is to separate out economic activity So something that would constitute GDP of Web3, something that would constitute builders coming in and creating businesses, obviously digitally native businesses, so things like NFTs or virtual worlds or communities or access to things or the ownership and movement of various digital assets and abstractions. That's all human labor. And out of human labor, you start having commerce and you start building economies. And in commerce and economies, you create consumer and produce a surplus, and therefore you have something like the real economy. And then on the other side, you have financial industry. And financial industry, even in our world, right, is about 15 to 25% of GDP, depending how financialized we all are. And sometimes that's very symbiotic in the sense that having people who are unbanked is a problem. People who are underbanked or don't have access to credit and can't start businesses, that's a problem. You want to fix that. You want to create lots of fintech, lots of neobanks, access to credit, all of these things. But then from that symbiotic relationship, you can get to a parasitic relationship. And we know this in the shape of financial crises, whether these financial crises are the housing bubble and then the collapse of Lehman Brothers and the recessions that had followed, whether it is the collapse of the internet boom and sort of all sorts of weird incentives that came out of that, or whether in the crypto space now you have these centralized entities that intermediated the trading of the financial aspect of the crypto economy blowing up and creating liquidation cascades. And the financial problems that we're seeing, they're in no way, to me at least, are they specific to crypto. They are kind of the shape of human nature, fraud, scam, taking advantage of risky frontiers. And it's also the problems that recur in financial services over and over again. So things like having a prop trading firm sitting on top of customer deposits, maybe not a good idea, but also maybe a super obviously not a good idea because it's been in legislation for years and years before that. And so, again, for me, as somebody who thinks about the operating economy, about helping builders create software that is novel and does new things in a meaningful way, I try to draw that line between, yes, there's been a financial industry crisis and collapse as it relates to crypto assets, but that shouldn't change my fundamental thesis about what the technology does, the types of things that can run on decentralized software, and the value proposition that we get out of computational blockchains.
Thank you, Lex. And if it's okay, Teana, I'll move over to you. Circle is, without a question, synonymous with stablecoins, a very important product in this ecosystem. But I should also say, as far as I'm concerned, you're one of the founders of the concept of crypto policy and regulatory affairs. You've been doing this for a very long time. So what's your take?
So similar to, ladder off of what Lex has just shared, I think that if we look at the situation that we're in right this moment, this isn't a CeFi, DeFi crypto thing. The FTX situation, I will call it, to me is an example of incredibly bereft corporate governance and fraud. And that's not a crypto story. It just happens to be a crypto company that this happened with. So I think if we kind of back up and take a look at, through the course of the last couple of weeks, what's continued to work well, and DeFi has not experienced a number of the problems that we've seen in CeFi. Code continues to run, contracts continue to settle, and a number of those protocols are operating exactly as they should. So then when we look at the replication of, is this a Lehman Brothers moment in the terms of crypto, and we kind of look back on why this could have happened, I think there's a number of things that could have happened differently that would have put us in a different position. A lot of people talk about regulation, potentially could have prevented, some of this from happening. Certainly, I do think that the separation of maybe an exchange and custody might be something we should look at. The separation of, having market makers embedded within your, trading strategies as an exchange, not great. So, there's a number of things that, yes, potentially regulation could solve for. And I think that in some markets, regulators have been, very forward-thinking around trying to address issues around consumer protection specifically. But the idea of really looking at market conduct and market integrity, I think, has still kind of been one of the things that hasn't been at the forefront. Anti-money laundering, consumer protection, payment systems has been kind of at the forefront. So for me, I think that we need to look at this in a broader context. It's not, a crypto CeFi situation specifically. I think there's a whole raft of things that went wrong here. But I do think that it is a pinnacle moment for our policymakers to look to put in place protective measures and set some standards around what's acceptable corporate governance and what isn't.
And I think, and we'll have some time to talk about what those might be in a second. I'm going to generally try to shut up because there are very smart people on stage. One thing that I want to say is I completely agree with you. I think before this is a crypto story, it's just a story about bad corporate governance and unchecked, irresponsible entrepreneurship with no checks and balances. And that's really important to remember, that it has happened in heavily regulated entities as well, including banks.
One thing I would say is that, we did kind of experience this bull market. And I think within this bull market, there was a lot of cash, there was a lot of hype, there was a lot of excitement. And I think it's incumbent upon the industry to start asking more probing questions of each other instead of kind of YOLOing into the next big thing.
Yeah, Alex and I were just talking about confirmation bias a second ago. So I want to move to Omer next, and just as a heads up, Alex, afterwards you, and then you, Lawrence. But Omer, you guys are really in the trenches of going deep into how DeFi works and how it can become safer. What's your take on how did we get here? And is DeFi and crypto still an alternative? I'll go back to the question.
Well, definitely. I think it's an alternative. Obviously, I'm biased, but I'll also speak a little bit about why. So just to set the stage, everything that happened with STX to strengthen kind of the words that were said here by my fellow panel members, it's not new, right? It's fraud, it's lack of corporate structure and governance and oversight, and it's happened before on innumerable occasions across traditional markets and regulated markets. Now, I think it's important to understand why it was able to happen here. And I'll actually take a page out of your book, Chen, and really double down on the fact that complexity is a risk vector in itself. So we've seen DeFi explode over the past 2 years, and really the kind of accelerant for that has been the backbone of technological innovation in the smart contract space, automated market makers, and so on and so forth. Now, while these are incredibly technical and impressive and really kind of represent innovation in the space, they're complex and people still don't know how to interact with them. So what we have today essentially is a market where people are very excited and realize and understand the opportunity that is being offered in an emerging market. They want to participate, but they don't know how. So for that reason, they turn to centralized exchanges like Binance, Coinbase, and FTX. Now, even as regulators look at these centralized exchanges, they also don't understand kind of the nuts and bolts how everything is happening. And that leaves a lot of room to cover and kind of tell a different story in a way that every kind of business owner wants to. And that's what happened in FTX. Obviously, all this happening on the back of a bull market and being a very hot company who can raise a round on terms that basically no company has ever seen in such a time span helped, and also allowed them to command terms that weren't plausible or seen in other companies who've raised capital to this degree. But it's all part of the same story. Everybody wants to be part of this wave, and everyone's trying to figure out how to do that exactly. Now, to be clear, it's not a good moment for crypto. It's something that's going to kind of hinder adoption in the short to medium term. But when we look at long term, I think it only strengthens the narrative of why we're all here. Similar to what Teana said, as Alameda and FTX were declaring bankruptcy, the first loans that they had to close were on DeFi, not on CeFi. And the reason for that is because when you're managing finance on a blockchain, on a smart contract, the contract and the code dictate what gets executed. So they couldn't go to any trading desk or to any lender and tell them that they're good for the money. It's going to be a week or two and they have everything. They're just in a liquidity crunch. They had to return everything. Also, all of the moving of customer deposits and the highly leveraged positions that they did, they weren't on the blockchain because that would have been spotted right away. So everything else was happening in private markets. And I think when you zoom out, to me at least, it's obvious that the way to mitigate these things is not, of course we need regulation. Definitely need regulation. Definitely need regulators and policymakers to understand the technology better and put in the appropriate kind of brakes and guardrails in place. But the real way to stop it is putting, a lot of this on the blockchain and making it transparent. Because the distance between figuring out that something is not right and something fishy is happening on the blockchain is much faster than is possible kind of when everything is behind closed doors. So it's not a great place currently, but I think looking forward, the future is bright for DeFi and moving a lot of the financial world towards that direction.
I'm generally getting a sense that people in the panel believe that crypto and DeFi is still an alternative. Alex, moving to you, another person that I consider personally one of the founding fathers of crypto regulation and policy. We've been having these conversations already 5 years ago. What's your take from your vantage point at Galaxy and beyond?
Yeah, thank you, Chen. I think it's a word that's come up already a lot today, and I listened to some conversations that were had yesterday, and it's this concept of what is transparency. If we look at the traditional world and we look at some regulation that came through, very well-known piece of regulation, MiFID II, that was one of the sole drivers of that piece of legislation was to inject obligated transparency within financial markets. Now, there's a bit of a sleight of hand that's happened, and that is a bit of a loaded phrase intentionally, in the sense that everyone looks towards the transparency of the blockchain, and it's an incredibly, incredibly powerful piece. But if you take a piece of, if you take an element of corporate transformation, which is a very, very transparent underlying, and you wrap it in an opaque corporate structure that has absolutely no oversight, absolutely no supervision, absolutely no way of anyone really judging what's going in, and we assume that, well, we can actually see everything that they're doing, it's on the blockchain. There's a real danger there that I think a lot of people have been making assumptions. And that's really why I think we are where we are now. We spoke earlier about confirmation bias as well, and the idea that someone can be elevated to the level of genius, or elevated to some sort of pedagogical element of an industry, but the real factor is that just increases the chance of things like hubris. And I think that is also another reason why, realistically we are where we are in this particular situation. And those core human biases is a real driving factor as to why regulation exists in the first place. The idea that someone has elements of control, a person has elements of control I'm talking about here, because I think everyone in good faith understands that this is not a crypto problem. We've said it a number of times on the panel already. This is a human problem. This is an element of someone was able to manipulate a system in such a way and then leverage that position in order to opaquely do whatever they want. And I think regulators globally need to take a step back and understand why they actually need to regulate in the first place, and not look at the technicalities of their rule book, not look at, well, can we regulate? I think it's quite clear that regulators should regulate. So in good faith, they need to find ways in order to regulate. And I know we're starting to have a number of conversations with regulators around the world and about that. And there's some guys really looking towards the more theoretical rationale behind regulation. I've had some great conversations about, what is the social contract between a regulator and society. I think most regulatory frameworks today deal with the concept of consumer protection, but they deal with the concept of consumer protection within the regulatory perimeter. So we only care about protecting consumers if they are doing an activity over which we have purview. I think with the advent of DeFi, with the advent of decentralization and disintermediation, which is, these two are not the same thing, and that really needs to be understood. I think the social contract towards consumer protection needs to be perceived at the gross level, and we need to start understanding, well, okay, how do we encourage people to come through a regulated intermediary to access something like DeFi, as opposed to trying to force or coerce with a stick people, we'll fine you if you don't do it, or we'll create a general prohibition to prevent it. I think society is moving on in response to, potentially some poor regulatory action over the last few decades. And I think that everyone needs to kind of catch up with that.
Thank you, Alex. And Lawrence, I left you for last for a reason. And that is that, I know few people who understand risk management and across such a swath of different kinds of organizations, both in crypto and traditionally, and how to bridge those gaps, as well as you. So I'm curious to ask you, what was missing? What's missing in the industry? Generally, how did we get here?
Thank you for the unwarranted compliment. I think I'm going to disagree with something you said at the beginning, which was you said, let's look back a year and there's a lot more. Let's look back more than a year. Let's look back to the ICO boom a few years ago. Let's look beyond that. Let's look back to the global financial crisis, LIBOR manipulation. Let's look beyond that. Let's look to the rogue traders of the late 90s, early 2000s. Let's look beyond that. Let's look to the commodities manipulation of the late 80s. Let's look beyond that. Let's look to the cartels and the monopolies. Heck, let's look beyond that. Let's look to tulip mania in Amsterdam. Which may or may not have happened, but makes a wonderful story. We have had, and at every stage along the history of financial services, we have had governance challenges, governance failures, and therefore market impact. And at every stage, new technology has come out, and there has been potentially a pervasive belief that the technology will solve conduct issues. And I'm going to create some totally false tension between me and Omer, because we actually agree on these things, but I'm going to create false tension and suggest...
Please raise the microphone a little bit.
Yeah, it's good for the panel, right? So, you're totally wrong. It's awful. But the idea that technology by itself will solve these problems, that transparency on the blockchain by itself will solve problems of governance, that understanding and interrogating smart contract behavior on the blockchain by itself will solve governance problems, that I don't think is right. I think what we are seeing is a need to learn and remember all the lessons of governance over the last 200 years in financial services and where we've got to, and use those alongside the incredibly clever and incredibly advanced technological solutions that we now have. And I think the answer to how did we get where we are is that we are seeing that the challenge over the last 20 years, over the last 50 years, the challenge of human conduct risk is a pervasive risk in financial services industry, in every industry, and that is a risk that no participant, no matter how much they seek to reimagine the fundamental nature of finance, can afford to ignore. And that is only solved by a combination of culture and technology. And that's how I think that's where we are, and that's where I think we're going as well, is it's the same challenges repeated again and again and again.
I think I would just add to that. Sorry, Lex.
Oh, I love it. Please, let's do it. So Alex and Lex, please.
There's a very important element that and there's a word that I haven't quite heard yet on the panel, although it's very loud here, is the innovation angle. Whenever we talk about regulation in crypto, it's always met with the foil of innovation. But we need to take this innovative step. We need to take this very innovative approach. I agree wholeheartedly, but we need to mature is an aggressive word, and it's not really what I mean, but we need to move away from kind of innovation for innovation's sake. And that's not to say that any solution or protocol out there is a solution looking for a problem. I think that is a ridiculous straw man argument, and incredibly arrogant of people that make that comment. But I think that we need to pursue a responsible innovation journey now. We need to innovate within guardrails that exist to protect us from the outcomes of the biases of the innovators. And I think that kind of sort of goes hand in hand with that. I think that believe me, if I could automate any compliance function, I would absolutely automate any compliance function, because a tired compliance officer misses things effectively, and that's something that you can't get away with, and we shouldn't ever accept. So I wholeheartedly agree that there is a place for technology, but we need to have a really aggressive rule set around why are we innovating in this space, and what are the outcomes, and we need to kind of innovate in the same direction, and that is all stakeholders include regulators within that stakeholder set.
So I'll take the opposite side of the pretend argument. Everyone else is wrong, only I'm right. I think that's how it goes. Said Sam Bankman-Fried to himself on Twitter. So I do think that going back, it's really important to separate the substantive questions of Web3 and on-chain developments, and then the human nature questions and the behavioral faults that you've alluded to, which are absolutely super duper correct and right. There is, I don't think that SBF is a singularly bad actor. There's lots of people. Some of them are really bad. Some of them are medium bad. Some are a little bad. Some are good until they become bad. There's systems that create these outcomes. But at some point, they did say, "Hey, let's use customer funds to pay down our debts." That's a line, and that's a human behavior issue, and it's exactly what you're describing. And the market manipulation bits and pieces definitely there, right? Let's create some activity on Solana because we want an Ethereum competitor. Not super great. And I think you can't automate that compliance. That's totally right. But then on the other hand, I actually do think we need to invest a lot more in specifically subject matter innovation and development, because the Black Swan event, if you trace it back, it's Terra and Luna, right? So it's not like, oopsies, they covered their $10 billion hole because they lost it for no reason. They lost it because they invested in a protocol and had lots of counterparties and got levered up by investing in a particular substantive thing, which is the Terra protocol, which had a, let's say, recursive algorithmic stablecoin design where the protocol token and the stablecoin token were linked. And in good times, it recursively goes up, and in bad times, it recursively goes down. And, why are there good and bad times? Well, you can point to the Federal Reserve and interest rates and recessions and COVID and supply chain crises, right? This stuff isn't happening in a vacuum. And so I do think we need to spend more time on developing disciplines like tokenomics, and knowing that particular shape of a design, protocol design, it doesn't work. Doesn't have to be a $40 billion mistake, but that is a substantive thing that I think we all need to spend more time investigating and doing and developing. And I don't think you can regulate that, because my bet is there's zero regulators and probably zero practitioners that know anything about how the next protocol failure happens, because until the experiment is run, you don't know the answer. So that's one. And then short second point about the transparency on chain. So I was having a conversation with somebody recently about DocuSign, who used to work at DocuSign, and it brought me back to this feeling I had in the mid 2000s or the early 2010s when, when you sign a real contract in paper, it felt real. You were in a lawyer's office. That was like legitimate legal work. And if somebody emailed you a DocuSign, you were like, who is this scammer trying to get me to put a digital signature on my digital legal document, right? This is BS. And today, you would be psychotic to have that point of view. I trust DocuSign. I don't trust a single piece of legal paper because I'm going to lose it. Who knows if there, whatever. It's just nonsense. Like, of course I want the digital signature, right? And so our trust has changed from wanting the physical to wanting the digital. And my bet is that in the next 10 years, we are going to super trust things on chain. Like already today, I feel that if there's proof of reserves in an Oracle on chain, I feel way better, even if the stuff that's going into it may be of low quality, but I sure feel better about than if it's on a website or in a tweet. So I do think we're going to have Oracles getting put on chain, and our attitude about what's transparent and what's proof is going to change along with the time as well.
I'll just add to that, sorry, on the proof of reserves.
Quickly? Okay, very quickly.
Just I used to work at a regulator, and I would say that in the space of about a week, the industry has come up with or coalesced around a proof of reserves concept that is infinitely better than any regulatory reporting framework that a regulator has and has iterated over decades. So that for me is a prime example of responsible innovation and something that is a positive thing regulators should look towards.
So proof of reserves is not new. So, I mean, it might be coming into fashion, but, I worked for a UK-based Bitcoin exchange circa 2017 that was doing proof of reserves from its inception in 2013. Not a lot of people were doing it. And maybe people didn't value it as much as they should have. Certainly at Circle, we also issue, audited proof of reserves, but that's not new. But I do take your point that within most of the legislation that we've seen, separate from maybe some of the very specific stablecoin regulation that is articulating how reserves should be accounted for and audited, it is not something that regulators have been speaking about, but it's not a new concept.
Fair point. So you've already very aptly started taking us in the direction that I was hoping this would go, which is really in some ways answering the question in the title of this panel. I have a growing list of the original sins of the crypto industry. One of them, in my personal opinion, and obviously no one here has to agree, is this dichotomization between decentralization and centralized and decentralized financial services. I think that decentralization is not a binary, it's a spectrum. It's expanding the realm of how people will be able, and already is able, and will be able to interact with financial services over time. However, for both of them to live on the same spectrum, there's no question that there are a lot of things that need to happen to create some of the simplification, risk monitoring, transparency that we've all discussed. So my next question to you guys, and because we're starting to run low on time, let's try to keep it around a minute as much as possible. And Teana, if it's okay to start with you, is how do we get there? What do we need to do? What are you personally going to be focusing on as part of your work at Circle, as part of your work with Crypto UK, and just as a leader in the space to get us to a reality where both of these can operate in the same ecosystem and really serve society better as a financial services industry?
So I think you're probably thinking I'm going to give you a policy response. I'm not.
Whatever you want.
I'm going to get on Omer's bandwagon. I think that spectrum has the divide that it does today because fundamentally DeFi is still kind of hard to use. And so for your average bear, if you say, okay, download MetaMask and here's your ledger and, you move all this stuff around and, get yourself signed up on Uniswap, that's hard for somebody that doesn't know what they're doing. And sometimes, I make mistakes. I sent some tokens to the wrong chain the other day, and I don't know where they are. Maybe I'll get them. I don't know. They're gone. So
it happened to us all.
So I think that fundamentally, if we look through the eyes maybe of a policymaker, and we were able to, as a community, remove some of the friction, make these things easier for people to use, and again, easier for them to understand. There's a lot of questions around financial literacy, which I think is kind of poor today as it is. We have historically put a lot of trust in our third-party intermediaries and our banks, and we just assume that they're going to do the right thing. And now we're telling people, well, you can bank yourselves. That's a big ask. So I think that the infrastructure and the interfaces need to be simpler and easier. We need to be able to describe better what the services do, not what the tech is behind it. People don't care. They don't need to know that necessarily. And still describing the transparency benefits. And I think we've got kind of a communication problem, which I think then stems into how policymakers view the transparency level that we're able to communicate to users.
Well, that's such a good point. I always think about it. When we watch Netflix, we're using the internet, but we feel like we're watching TV. And that's ultimately the use case and why we do it, not because we want to use the internet. Omer, for the second Israeli in this panel, you've been very polite sitting in the corner, sitting over there. So please, what are you going to focus on? How are you guys working to enable safe and regulated decentralized financial services?
So I think for us specifically at Chaos Labs, we're exactly that, small amount of companies that we absolutely need to understand what's happening on the back end and the blockchain. But I completely agree with Teana that it's not relevant for everybody else, right? Like the reason that we have technological innovation, although, I do conform also to the group of people who enjoy the tech for the tech, but ultimately it's to innovate and solve problems. So the interface, right now, the level of abstraction is very, very low. You're interacting with the smart contracts. Maybe sometimes you'll have like a GUI to do it if it's like on a MetaMask or a nice interface like Uniswap. But it's completely unintuitive, and the reason for that is because a lot of the underlying framework and code that's running is new in itself. Over time, it's happening slowly. We're seeing the abstractions getting better, the user experience is getting better, and it's becoming more friendly and opening more doors to people to actually access the services. That's going to happen over time. It feels like it's happening slow. I could say that I don't think that we've made the progress I think a lot of us wish that we would have over the past 5 years if we look at kind of the UX that have to do with wallets. But it's happening, and it needs to get to a place where a user doesn't know or care if something is running on the Ethereum blockchain, on Arbitrum, on Optimism, or anything else like that. So it's moving towards that direction. What's important is to keep the builders in the ecosystem and make sure that the support is there. We're still so early. And it's important to basically know that where we're going is going to be worth it, even if the journey is long. But we're on the right track, definitely not there yet, and there's just a lot of opportunity ripe for a lot of builders to kind of capitalize on and build.
Lawrence, what are your thoughts on what can be done, what should be done in the near future to enable both of those to operate together and really benefit from the merits of crypto and decentralization?
So I don't think we should be thinking about them as DeFi and CeFi. In the dream world, there's just Fi. There are you think as an investor or a capital seeker, here is the exposure that I want, here is the risk that I want, here is the product that I want access to or the capital that I want access to. And I choose, do I want to access that exposure, that capital, that product through a centralized organization? I might go onto a spread betting website and purchase Bitcoin exposure. Or I might go on to a decentralized exchange and buy Bitcoin directly. Both of those give me similar exposures. There's different credit exposures and other elements. They give me similar exposures, completely different routes. I think what I would like to see is a world in which wholesale financial markets and retail financial markets get access to all of the exposures they want through the routes that they choose. And that what we do around making access easier in the DeFi space is simply give people another choice on how they access that financial exposure or that financial resource. And so we stop thinking of it as two different ecosystems, but just of different ways to access that exposure and to understand the risks that come with the choices that we make in how we access that exposure.
Thank you. And so we have about 2 more minutes, and I do want to ask the audience for a second. We have an opportunity to take a question or two. Does anyone have a question? Because if not, I have plenty. Yes, we have a hand in the audience. Who's our lucky inquirer?
So my name's Tom Higgins from Goldeye Crypto Switch. Question I have is, when you think about DeFi, to me, is it is it possible that it will be able to take over all trading, or do you think it's a bit like communism, where fundamentally it's a nice idea, everyone's happy and no one doesn't eat and it's all wonderful, but people come into play and bugger it all up? So is it possible that DeFi has the ability through its technological state now to be able to do that?
Great question. Who wants to take it first?
I'll take the kind of the first up. When I kind of think about the future of financial services, which is kind of where we're going, in crypto, everyone loves a trilemma. And I kind of see, a regulatory trilemma of decentralization, disintermediation, and regulation. And you can probably only pick two, and kind of within that world. And I think if I were to choose the direction that we're going to go in, it's going to be more towards, decentralized services which are accessed via a voluntary intermediary. So, when we start talking about, and I mentioned it earlier, the social contract that regulators need to have, I think, you're never going to be able to prevent someone from accessing a decentralized platform in a disintermediated way. But what I think you want to do is to create a co-optive framework whereby everyone has the choice whether or not they want to pay a little bit of rent and get access in an intermediated and safe way where they can benefit from things like ombudsman services, compensation schemes, conduct of business requirements, etc., and go and get the same exposure at the end of it. That's the kind of the future that I see.
Okay, we are running out of time, but I don't think they're going to kick us off violently. So I do want to hear from everyone quickly as much as possible. Teana, do you have anything to add to that?
I don't see it as binary. I think, as Hen said, it's a spectrum. And from my perspective, I think what all of these products, services, and protocols offer today are choices. And how you choose to access those choices is I think what is the kind of real innovation. I do think that the idea of open source protocol technology that does allow for reduced friction, faster transaction times, and greater transparency is incredibly powerful. And so I think that as we lean into that more, that will definitely change the way that value moves around the world. But for me, this just provides choices. It's the same answer that I would give you if I said, crypto is going to replace banking. I don't think that's true, but I think that it provides choices.
Right. Lex, Lawrence, and then Omer. As much as possible, 2-3 sentences. I asked. Let's see if it works.
I think we're confusing the local maximum of brokerage for what's actually going on. Imagine sitting in 2002 and being like, how can we trade this private equity? Can we trade this private equity here? Will private equity replace equities? And so on. The thing that's going on is a new economic infrastructure on which people are building new types of businesses, using new types of digital objects, and creating new spaces that increasingly people inhabit to collectively do labor and build culture. And sure, it's interesting how people buy the tokens of that, but it's not the important question. And I guess if I were to pin it, I would say DeFi will be the banking industry of Web3. The banking industry has no chance to bank Web3 unless it's on DeFi infrastructure, but it's going to take a while to build out the Web3 economy to a place where it's credible.
Thank you, Lex. Lawrence?
I think my answer would be, could DeFi replace it? Yep, technologically, in theory, it probably could. Should it? I think absolutely not, because there are services provided by everyone along that chain of centralization to decentralization that for some client, some investor, some capital seeker somewhere, they need whatever point that is along the spectrum. So I don't think it should replace it, because we would lose some of those choices.
I'm personally definitely not going to stop using a bank, but I'm also personally definitely going to use DeFi. That's at least me. Omer, let's finish it off with you.
Happy middle ground. So just technically, there's something called the technical blockchain trilemma, which is decentralization, scale, and security. And kind of one of the knocks on early blockchain applications was the throughput and speed of execution of different transactions or the settlement in the financial world. That's being improved. So kind of to touch on what Lawrence is saying, you have layer 2s, roll-ups, all these different solutions. Can it replace? Yes, but ultimately, with all of the hype and the excitement, I look at blockchain as a glorified, public database, and you need to understand what the use case is. Personally, would I prefer to have, financial history and transaction history in an area where it's accessible and auditable? Yes, but maybe there are use cases where that's not right. So in terms of the ability, it could replace. Will it replace? Depends on the use case and what people need.
Thank you very much. I am personally super excited to continue building this with you guys and with many others to simply help finance serve people better. I hope the audience is as well. Thank you very much, guys.